Hi everyone. So the objective of the IASB is to develop a single set of high-quality global accounting standards. In order to facilitate the consistent and logical development of these international standards, the IASB issued a conceptual framework comprising a coherent set of objectives and principles for financial reporting. This conceptual framework will provide a point of reference to resolve accounting issues or in the development of new accounting standards. The conceptual framework itself is not a standard, but it may be used by both preparers and users to better understand the requirements of existing standards and the resultant financial reports. The conceptual framework is actually a theory of accounting. It is a theory that prescribes or tells us how accounting should be carried out. This sort of theory is called a normative theory. We will discuss normative theories in more detail later in the course. The conceptual framework prescribes the objective or purpose of financial reporting so that we have an understanding of why we prepare financial reports. It then prescribes the qualities or attributes of useful financial information that are contained in these reports. We use certain elements or components to construct the message to be included in the financial reports. The conceptual framework prescribes the definition of these elements and the conditions for us to recognize or include them in the financial reports. The final part of the conceptual framework should prescribe an appropriate method to measure the elements used in the financial reports. But due to its controversial nature, the section on measurement has yet to be completed. The first section of the conceptual framework deals with the objective of financial reporting. The purpose of financial reporting is to provide financial information about the reporting entity that is useful to existing and potential investors, lenders, and other creditors in making decisions about providing resources to the entity. This is therefore consistent with the measurement and communication system discussed earlier. The conceptual framework prescribes that financial reports should be prepared to provide useful information for users to make decisions about the allocation of scarce resources, and it focuses on resource providers such as shareholders, investors, and creditors as primary users. Are there other groups of users of financial reports? And do they need the information for purposes other than the allocation of resources? We will examine this later in the course. What are the types of financial information that would be useful for the purpose of making decisions about the allocation of resources? The conceptual framework prescribes that the fundamental characteristics of useful financial information is relevance and faithful representation. Relevant information implies that it would make a difference in the decision to be made by the users. Information would make a difference if it enables users to predict what may happen in the future or confirm past predictions. Relevance is also closely linked to the materiality of the information. Faithful representation refers to the resolution of the image of the firm that is being conveyed by the financial report. The more faithful the representation, the closer the image is to the actual condition of the firm. Faithful representation is indicated by the completeness, neutrality, and freedom of error of the information. In order for financial information to be useful, it must have both the characteristics of relevance and faithful representation. Comparability, verifiability, timeliness, and understandability are characteristics that would enhance the usefulness of financial information that is relevant and faithfully represented. We must also not forget that reporting financial information imposes a cost on the preparer. It is therefore important that the cost incurred in providing useful financial information is justified by the benefits to be derived from providing that information. Financial reports portray the financial effects of transactions and events by grouping them into broad classes according to their economic characteristics. These broad classes are termed as the elements of financial reports. The elements directly related to the measurement of financial position of a firm are assets, liabilities, and equity. The elements directly related to the measurement of performance are income and expenses. The conceptual framework prescribes criteria for the definition of the elements that represent their essential features. In assessing whether an item meets the definition of an element, we must also consider its economic substance and not just its legal form. Recognition is the process of incorporating an item that meets the definition of an element into the financial reports through the double entry system. The conceptual framework prescribes the criteria for recognizing the elements in the financial reports. Measurement is the process of determining the monetary amount at which the elements are to be recognized, while presentation and disclosure refers to the manner in which the information is presented in the financial reports. The measurement of an element in the financial report involves the selection of an appropriate basis of measurement. The most common basis of measurement is historical cost, which measures an item based on the price paid at the date of acquisition. In recent years, there has been a lot of criticism of historical cost, of not providing relevant information, and does not faithfully represent the current condition of the firm. Alternative measurement bases have been proposed, such as current cost, realizable value, and the present value. The conceptual framework does not prescribe a particular measurement basis, and therefore the accounting standards have adopted a mixed measurement model. You have already studied the conceptual framework in previous courses, and I would expect you to be familiar with its detailed prescription. I suggest you do a quick revision if you have forgotten much of what you have studied before. What we will be focusing on in this course is a more critical examination of the conceptual framework. I look forward to seeing you next week. Cheers.